Did you know 13,650 dividend stocks trade on various US exchanges? And the highest yielding stock right now is a company called Site Centers Corporation, paying a whopping 375% dividend yield. In this video, I'll be covering the highest yielding dividend stocks worth looking at. By the end of the video, you'll learn my process to screen for quality companies that are paying a higher dividend so you can do it again and again in the future. And I'll also tell you a little bit about each company and why I like them. Okay, so I wanted to give a shout out to the Motley Fool for sponsoring this video. The Motley Fool provides investing insight and stock recommendations for investors of all skill sets and risk levels. And I'm excited to partner with the Motley Fool to bring you 10 stock picks from their stock advisor. The average stock pick inside Stock Advisor is up 863% versus 173% for the S&P. Scan this QR code or check the link in the description to get your 10 stock picks right now. Just because a company has a very high dividend doesn't mean you should automatically buy it. I mean, we have to look at other metrics like, do Wall Street analysts like the stock? Is the dividend stable? Well, in the case of Site Centers, it's not a company that I'd be buying, at least not today. For example, if you look here in September, the stock dropped almost 50%. Dividend yields and stock prices are correlated. If the stock drops, the yield goes up, and vice versa. Worse yet, if you bought this stock on yield alone, you'd be in for a big surprise because in the coming quarters, I think it'll likely get cut. The company is selling on assets, restructuring investments, and so on. And these type of companies are generally not appropriate for most investors. So it goes without saying that if you're looking to buy high-yield dividend stocks, you'd want to buy a quality company, one with healthy financials, growing earnings, and that it's highly rated. So how exactly does someone look for companies like that? Well, you could manually do the research company by company, or you could do what I do and use a stock screener. A stock screener is kind of like a search engine, but for stocks. And Barchart has my favorite stock screener that I use every single day for researching the best stocks to buy, and of course to discuss in videos like this one. Their website gives you all the basics for free. All you need to do is create an account using this QR code. Okay, so like I said earlier, when looking to buy high-yielding dividend stocks, you want to find quality companies. Companies with growing earnings, stable dividends, and buy ratings from analysts. Analysts are professionals who follow companies carefully so that they're all aware of their ins and outs. Then they rate the stock on a scale of strong sell to strong buy. So it's natural that we want companies that rate higher on that list. Another metric we need to look at is the number of analysts. If one analyst happens to give a stock a strong buy rating, then okay, maybe you think, what's the story here? Are they related to the company in some way? Compare that with, say, another company that has 50 or more analysts. Then maybe you're not so concerned about bias. With analysts out of the way, we should also be checking the company's earnings to ensure that it's growing. Actually, discussions about earnings come out quite a lot in my Discord group. Well, for a quality company that grew their earnings, is highly rated, and pays a high yield, well, I'd say that's a slam dunk, wouldn't you? I mean, what would you prefer, a company with declining or increasing earnings? Now, one way to check earnings is to check the earnings per share, or EPS. This is the company's total net profit divided by the number of shares in circulation. The higher the EPS, the more profitable the company is. And this works with any company. But there is an easier way to do this. We can screen for companies with 5-year earnings growth over a certain amount. So in the screener, I'm going to add 5-year earnings growth, and I'm going to set that to high. That means in the results, we're only going to get companies that have grown their earnings 30% or more over the last 5 years. I'll also add number of analysts, analyst ratings, and the dividend yield. Though I do have to clarify, the dividend yield in this screener is set for the trailing 12 months, which means it accounts for the payments in the last year, not the future ones. So I'll have to do a little bit more digging once I get the results, but that's exactly why stock research should be thorough. I'll look for forward yields, which is done by taking its last quarterly dividend payment and then multiplying it by 4, and then getting the percentage based on the stock's current trading price. Forward yields assume that the next 3 dividend payments are the same as the last one, which is usually the case for companies that pay consistent dividends. For the number of analysts, we'll say very high, because we want lots of analysts covering the stock, and set the minimum rating to moderate buy. This includes buy and strong buy. For dividend yield, I'll leave it blank so that I can sort the results by dividend yield later on. Now I'll hit see results and we'll see what we got. So as you can see here, we have a whopping 320 companies that came up. And if we click on the 5-year earnings column, we can see which companies grew their earnings the most over the last 5 years. But for this video, we're looking at the highest yields. So we're going to sort by dividend yield. Now, right out of the gate, Lennar Corp, or their trailing 12-month yield, is elevated because it spun off its Melrose Properties segment. And there's also Civitas, which I'm going to bump down to second place, and you'll see why when I dive into the company. Now, the first one on the list is Gaming and Leisure Properties Incorporated. This is a real estate investment trust that owns and leases casino properties to gaming operators across the United States. The company generates revenue through long-term lease arrangements with major gaming brands, ensuring stable cash flow, and of course, the company pays regular dividends that today works out to around a 6% forward yield, which is above average. Next up is Civitas Resources. This is an energy company that produces oil and natural gas in Colorado and is one of Colorado's largest pure-play oil and gas producers. Now, here's why I bumped it down to number 2. In the past, the company paid regular dividends and special or extra dividends based on how well the company performed in the past quarter. However, its last dividend payout did not include an extra dividend amount, and given its Q4 financials, I'm unsure about its dividend announcement later this month. But despite not paying the extra dividend, the company still pays enough to make it to the top 2 with a 5.97% forward yield. And last but not least, on our list of high-yielding dividend stocks is Healthpeak Properties Incorporated. This is another real estate investment trust that operates healthcare-related properties, including life sciences, medical offices, and senior housing. The REIT holds properties throughout the United States, with some of its most prominent in California and Massachusetts. Healthpeak Properties currently pays around a 5.94% forward yield. Now, here are the other companies that appeared on the list. And again, remember, these results are based on trailing 12-month dividends. So be sure to look out for one-off special dividends, as these may not reflect yields going forward. And feel free to discuss it over in my Discord group. Permian Resources Corporation, Sustainable Infrastructure Capital, Canadian Natural Resources, Vici Properties, Murphy Oil Corp, Eversource Energy, Regions Financial, Suncor, OneOak, Diamondback Energy, and Patterson UTI Energy. Finding high-yield dividend stocks is one thing, but finding those worth adding to your portfolio is a whole other story. Stocks that are highly rated and have growing earnings are a good place to start. Now, are these the only metrics to look at? No. You could always add RSI, which tells us if the company is over or undersold, or look at its price to earnings ratio, which tells us if it could be over or undervalued compared with its competitors. So, what do you think? Do any of these stocks interest you? Let me know in the comments below because I'd love to hear back and respond. And of course, if you learned anything, why not hit like or subscribe and hit that notification bell so that you never miss out on any of my future videos. Thanks so much for watching, and I'll see you next time.